Well, listen, this is quite an interesting year in Saudi. It's quite a disruptive year because we have a flow game. We have an index inclusion, a double index inclusion, as a matter of fact. So this basically has taken over all the discussion over geopolitical, oil, and you name it, and all the changes. And that's basically what happened. So if you look at the market for the past 2 or 3 weeks, ever since the Abha airport attack or the oil, not the oil, excuse me, um, the oil correction that happened as well at Inshud, and the Iranian supposedly Iranian attack on the tankers, the market has almost totally and utterly discounted that.
Fadi, why do you think that's the case? Why haven't these regional tensions been filtering into regional equities?
Well, then again, it is about flow. So let's not forget the quantum here about public equities and what's happening in Saudi. We have a flow game. We have a year where we've seen already about $11 billion of inflows for a market that trade basically about short of $1 billion. I used to trade short of $1 billion a day. So that basically it was like kind of a storm taking everything with it. That being said, would that be warranted or not? Well, we have a high geopolitical risk. We have quite an expensive equity market. We're trading at about 17.5 times earning, a 30% premium over the emerging market index, the MSCI EM, and a 25% over the 5-year historical for Saudi. We have an EPS outlook, a growth outlook that's not always clear yet, specifically on petrochemicals, and now less so with banking. So the fundamentals maybe are not there, or at least it is an adjustment here in Saudi with the economic changes. That being said, what is really taking over is the flow game, and we have an index inclusion tomorrow, the third wave of the FTSE index, and that's, I think, a lot of the funds have been pre-positioning towards this inclusion, hence affecting the equity market and basically discounting the geopolitical noise, quote unquote.
Fadi, walk me through the foreign investment case for Saudi at the moment, because obviously it's a difficult one, isn't it, when we're talking about bringing in major investors from New York, isn't it? Persian Gulf is essentially exploding once again. How are you seeing the impact?
Well, listen, what the impact is because of the flow game. So we have a lot of the passive investors that came in. So the passive index buyers that came into the market because they have to come into the market because Saudi represent about 2.5 to 3% of the MSCI EM weight. So it is a reality for them, and they must do with it. That being said, what we were expecting was much more of the active investors, those that look at the geopolitical risk, those that look at the interesting valuation potentially provided by a certain market, specifically that of Saudi. And these guys haven't yet positioned. And I can understand very well. So these guys only buy the MSCI EM, but they have the right to overweight, underweight. And in that specific instance, we can believe that they are more tending or trending towards an underweight position situation as opposed to an overweight situation. And I think you have to account for potentially a certain inflow coming from those active index trackers that ultimately will come into the market, but if and only if the market does provide certain geopolitical stability and potentially attractive valuations.
Fadi, I've been looking at your slides. You're kind of like the Karl Rove of the Saudi market. You've always got slides for us. And I was looking at the weekly liquidity numbers for the Saudi market, and there seems to have been a major spike in that liquidity in the last couple of weeks. Was that off the back of the government sort of coming in there, or what was that spike in liquidity?
Well, the spike of liquidity that you see specifically about 2 weeks ago was specifically the week of MSCI inclusion, which was like the week of 22nd of May. And came at the end of the week, 28, 29 of May, we had a major balancing day, which was the $7-8 billion coming in one day, which is unheard of. That's obviously these passive funds that have to buy the index on that day. And that's 50% of the MSCI equation, which will hopefully follow suit in end of August. But what we have today is actually a surge in liquidity on average. If you look at the Saudi, I would say Tadawul daily liquidity, we are about 35% higher than we used to be at the beginning of the year. We were a bit south of $1 billion, about $800 million a day. Now we're about $1.3 billion a day. So on average, there was some benefits. Now the interesting point would be the verdict, jury's out, would be after MSCI inclusion, where would that liquidity end up being once the whole flow games have cleaned up? Do we have a liquidity that's sustained at these levels, or do we have a drop again to revert back to the last 18-month average, which was quite low?
Hey,
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.